the first Targets in Focus interview of the trading week, and you're joining me, Natalie MacDonald, as I talk to Annika Lindblad of Nordea Markets to discuss her FX forecasts. Today, we're putting emerging market currencies under the microscope. Annika, this week is really a week for the G10s, with the US FOMC meeting and G8 summit taking place. But what knock-on impact are we seeing in EM trading sentiment for the week?
The emerging markets, they have suffered quite heavily from the weekend risk aversion in recent weeks, as speculations that the Fed will start scaling back its QE program have intensified, and thus this Fed meeting this Wednesday will be very crucial for many emerging markets as well. And if Bernanke succeeds in his expected dovish tone and manages to calm down the markets, then we could also see some calming down in the emerging markets and a correction to the weakening we've seen on the FX side, for example. But of course, the big event risk with the Fed is that Bernanke is more tilted towards significant QE tapering in the near term, which would further feed the fears of abating liquidity on the markets, and hence we can expect to see quite a volatile week in the EMs as well this week.
The present devaluation of the Russian ruble is being cited as a positive for the Russian economy, but is there a fear that it could slide too low, particularly amid slowing consumer activity and industrial production? How does this shape your US dollar Russian ruble forecasts over the short, mid and long-term period?
Yeah, well, there are definitely inflation risks from the strong weakening in the ruble, as things are not looking too bright for the Russian economy at the moment. But what matters for Russian markets and the ruble is global risk sentiment, the oil price, as well as the domestic growth prospects. And at the moment, we are in a situation where, on the one hand, the economic outlook remains subdued, and thus at least one rate cut is still on the cards. And on the other hand, we expect a correction after Fed speculations ease and the oil price gradually rises. So overall, the current situation amounts to me expecting a weak ruble in the very short term, a correction over the next few months to the levels we saw at the beginning of the year, and a slight strengthening potential in 2014 as the economy gains more strength.
It's been a difficult few weeks for the US dollar Turkish lira, which has remained weak as protests continue in Turkey. We'll be hearing from the central bank tomorrow, having already taken action last week to stabilize the currency. But what can we anticipate from this pair in the coming months?
Yeah, definitely the domestic turmoil has overshadowed the improving growth outlook and the ratings upgrades we've seen in recent weeks. The current weakness, it will definitely persist until domestic uncertainty comes down and QE speculations are settled. But in the near term, we only really see a correction back towards levels around 180 for the lira against the dollar, which we've seen for a fairly long time already. And for a further strengthening, the central bank would need to accept stronger lira, and this is only likely to happen in 2014 when the economy strengthens and inflation accelerates. So overall, fairly weak in the near term, but I remain quite positive on the lira overall, considering the decent growth prospects and its two investment-grade ratings, which welcome foreign capital flows.
And lastly, the Czech koruna has thus far proven resilient to the resignation of the country's Prime Minister today. Do we expect this performance to continue?
Yeah, the Czech koruna, it's indeed a fairly robust currency, and it doesn't tend to fluctuate much on neither global uncertainty or domestic issues. Interest rates are basically zero, so it sees less speculative capital inflows than many other currencies, and it's not that sensitive to changes in risk sentiment. There are many factors speaking towards a weak koruna in the near term, not least these increased political risks. The weak koruna is also welcomed by the central bank because inflation is very low and they are starting to get a bit worried about inflation risks. But I don't expect to see much further weakening from where we are now. So mainly sideways movement over the next few months, and only a strengthening in 2014 if we get the recovery we expect in the euro area and especially the German economy, which is very crucial for the Czech Republic.
That's all we've got time for right now, but don't go away. We'll be back shortly with plenty more exclusive interviews for you.